Imagine this. You're at your trading desk, heart racing, fingers twitching. The urge to act is like a fire in your veins. Buy, sell, do something. But here's the deal. That very impulse, it's the trap costing you money. Listen, I get it. You're frustrated, watching the charts, feeling time slip away. Every second you hesitate, it feels like a missed opportunity. It's exhausting, right? But let me break it down for you. When you rush, let those emotions drive your decisions, you're signing up for a roller coaster of losses. Emotional trading is like running a marathon at full steam. You're going to crash and burn. Think about it. You wouldn't rush into a busy street without looking both ways, right? Trading is the same. You need to pause, breathe, evaluate. That quick step back could be the difference between a smart entry or a devastating loss. Even a moment's delay to gather your thoughts. It can mean everything in this game. Trading is a marathon, not a sprint. Each trade is a long-distance run, requiring endurance, focus, and strategy. So don't fall for the trap of impulse. Control those urges. The market isn't going anywhere. It'll be there when you're ready. Ask yourself, are you ready to reset your mind and conquer those impulses? Because that's the first step before diving into the next chapter. Ever felt that itch to jump into a trade just because you thought luck was on your side? I get it. It's tempting, isn't it? You see a price move and think, maybe this is my moment. But here's the deal. That's exactly where so many traders get it wrong, and it often leads to painful losses. Patience isn't just a virtue in trading, it's your golden ticket to success. Think of a hunter out in the woods. They're not just randomly firing their gun at every rustle in the bushes. No, they're waiting for that perfect shot. They're scanning the landscape, focusing on the right moment to strike. Impulsive trades, they're like that hunter shooting at every sound. It might feel right in the moment, but you're likely wasting your bullets. Or in this case, your money. In trading, that sweet spot to jump in isn't about chasing every opportunity that flashes before you. It's about picking your moments with intention. When you wait and observe, you start noticing patterns and key levels. Patience allows you to gather intel and prepare for the real action. You don't want to be that trader who fires blindly, stunned when price goes the other way. Let me break it down. There are times when the market is just noisy, and jumping in too soon means you're caught in chaos, unprepared and unsure. If you get in at the wrong time, it's like that hunter taking a shot without a target in sight. You might hit something, but you won't be happy with what you get. Instead, wait for clear signs that something's happening. Wait for the moment when everything aligns perfectly. So here's a little challenge for you. Are you ready to embrace the waiting game in your trading? Because if you are, you're setting yourself up for greater potential profits. Stay tuned. Next chapter, we're diving into how to recognize those critical moments that will have you waiting for the right opportunities, ready to pull the trigger like a seasoned pro. Let's get to the heart of the matter. Your entry point? Think you can just rely on gut feelings to grab the right trades? Think again. Here's the deal. If you're making trades based on hunches, you're setting yourself up for disaster. Most of the time, those gut feelings are just emotions clouding your judgment. You want to trade with confidence, not emotional chaos. So how do you do that? Let's dive into some signals that scream, it's time to make a move. Picture this. The market moves, prices shift, and you're staring at your chart, wondering, what the heck do I do next? It's frustrating, right? You've been there, watching opportunities slip through your fingers while second-guessing every decision. But here's the kicker. There are clear signals in the market structure to guide your entries. It's like finding the train tracks after a wild detour. You just need to know where to look. Let me break it down with an example. Imagine you're observing a bullish market structure. Prices making higher highs and higher lows. Beautiful upward trend. But if you suddenly jump in when prices are soaring, what happens? You could find yourself in the middle of nowhere when the market reverses. Trust me, getting caught in that mess is a bad place to be. Instead, wait for the market to return to a key level, a support or resistance zone where you have that extra confidence to enter. And here's the kicker. Most traders lack patience and jump in too soon, leading to frustrating losses. Now imagine you're the patient trader. You're waiting, set for when the price finally reaches that key level, and boom, the trade comes to you. Your chart ready, knowing that moment you've been waiting for is finally here. When it gets to that crucial level and signals a higher probability entry, You're confident, not guessing. You're not just a trader, you're the one calling the shots. And how do you identify those signals? Look at the candlesticks. If they're making big movements, pushing up with strong bullish candles, then that shows momentum. But when you see a small, weak red candle, that's a red flag. It means momentum is fading, and now's your chance to pounce. You can drop down to a smaller time frame for confirmation. Wait for that strong bearish signal, which tells you that the market is about to shift, and then enter your position. But are you ready to trade based on facts instead of feelings? Because that's where the magic happens. Once you master the entry, you set yourself up for a solid exit. Are you ready to solidify those exits? Because that's where we're headed next. Holding on to a losing position? It's like you're dragging an anchor behind you. And let me tell you, that anchor's got one mission: to sink your trading ship. Frustrating, right? You pour your heart and soul into this, only to watch your money float away. But here's the deal. Emotions can mess you up. Exiting too early might leave you stinging when the market pivots back in your favour. So how do we navigate this wild sea of trading? What you need is an exit strategy, your shield against loss. This shield is crucial. It protects your hard-earned profits while ensuring you don't drown in despair. Think of it as your safety net in this roller coaster world of stocks and forex. You wouldn't jump off a building without a parachute, right? So don't jump into trades without a solid exit plan. Now let's break it down. A good exit strategy isn't about getting out at the first sign of trouble. Nope. It's about having predetermined exit points based on your own rules and market conditions. Visualize that shield. It absorbs the blows while you live to trade another day. Let's say you enter a trade, and sure, it's looking great at first, but then it dips. Instead of panicking, you know exactly when to pull the plug because your strategy is locked in. Maybe it's a specific percentage loss, or maybe it's a key support level being breached. Whatever it is, you're prepared, and your shield is strong. This is where analysis comes into play. Chart patterns, key resistance levels, or even the context of market news can help you set those exit points. Picture a knight on a battlefield. He doesn't charge ahead without knowing where to retreat, right? He reads the fight. Your exit strategies are your battles against uncertainty. But here's the catch. Will you learn to cut losses with the elegance of a seasoned trader? Or will you let fear and greed cloud your judgment? Before we dive into the tech that can support your trading strategy, think about it. What's your exit strategy? Let's explore the technology that will take your trading game to the next level. Are you still trading with a blindfold on? Relying on pure gut feelings? It's frustrating, isn't it? You watch the charts dance around and you can't help but feel lost. But here's the deal. It doesn't have to be that way. Technology is your ally, your flashlight cutting through the darkness. Imagine navigating a dark room without a light. You'd stumble, trip, and probably miss the door. That's what trading without tools feels like. Let's change that. Think about it. Every successful trader out there has gadgets and software that help them make smarter decisions. You've got indicators, pinpointing trends, alert systems, notifying you when your asset hits a specific level, and charting tools helping visualize price movements. It's like having a GPS for your trading journey. Without it, you're just guessing, and let's be honest, you can only guess right so many times before you hit a wall. Take a moment to reflect. Are you using a platform like TradingView to its full potential? If you're not setting alerts for key levels, or if you're ignoring volume indicators, you're leaving money on the table. These tools don't just boost your chances, they elevate your entire trading strategy. You wouldn't hike a mountain without a map. Why trade without a plan? Imagine flipping a switch in a pitch-black room. Suddenly, you see the obstacles, pathways, and exits. That's what good trading technology does for you. It lays out the landscape, showing you where the opportunities are and where to steer clear. Whether it's real-time news impacting your trades or analytics helping you understand patterns, these tech tools guide you. Think of technology as your extra set of eyes. It can spot trends you might miss on your own. Remember, trading isn't just about being right, it's about making the odds work in your favour. So ponder this. What tools are you currently ignoring that could really level up your trading game? Let that question simmer as we move into the final chapter of your journey. You know the old saying, every scar tells a story. In trading, losses can feel just like that. Heavy, painful reminders of mistakes made. But what if I told you they're not scars at all? They're stepping stones. Here's the deal. Every trade, win or lose, carries a lesson. Every time you hit that confirm trade button, you're on an adventure. Not all adventures end with a treasure chest of gold. Some take you through the caves of despair, but if you pause and reflect, you might find a different kind of treasure waiting for you. Think about it. You've probably felt the sting of a loss, maybe more than once. The frustration, self-doubt, and the endless replaying of what went wrong. It's easy to turn that pain inward and beat yourself up over it. But what if you could flip that script? The next time you feel hit by a freight train, take a second to analyze what happened instead. Turn that loss into a valuable lesson instead of a permanent scar. Imagine a scientist in a lab. Every experiment is a chance to discover something new. They mess up, fail, and tweak their methods until getting it just right. That's how you should approach your trades. Look back on each trade. Ask tough questions. What was my reason for entering? Did I follow my plan? What was the market telling me before I pressed that button? These reflections are your microscope, turning messy losses into potent learning experiences. Picture your last few trades. Don't brush them under the rug. Seriously, are they teaching you anything? Let's say you lost 3 in a row. Sure, it hurts, but ask yourself this: what did you learn from each one? If you step back and analysed, you might see patterns or pitfalls you hadn't noticed before. The best traders aren't the ones who avoid losses altogether. They're the ones who learn from every bout, no matter how brutal. So what did you learn from your last 3 trades? Think about it. Don't rush. Reflecting on your losses can change everything about how you approach your next trade. This isn't just about figuring out where you went wrong. It's about evolving. You've got the power to morph those failures into fuel for your trading journey. Subscribe to Trading Strategist, the new best trading channel on YouTube, and like this video. I'll see you in the next one. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.